go. Welcome to the midweek update. It is at the trading room here, January 25th. Joe with you. Let's get into it. I've got my 2 cents. We're going to share some stuff. There's some things to talk about. Let's get into some trading. You know the drill. Take responsibility for the outcome. So what have we been seeing? Well, we are in the midst of earnings season. It's out there. Things are happening. The results are as expected. I'm seeing in line from lowered adjustments or missed completely with pessimism in the future. And the markets have been shaking it off for the most part. Some of the larger tech companies, Microsoft was a big one yesterday. Its initial reaction was to the upside. And then they came out and they're worried about their cloud computing, seeing a slowdown in demand for that. And it gapped down, but to tell you the truth, folks, we can take a look at it here. It is climbing right back up. So I am seeing speculative and opportunity, or opportunistic, there you go, in the sentiment. It seems like everybody is aware that things are going to slow down. I'm getting this feeling of sentiment saying it doesn't matter, it's going to be bad, we know it's going to be bad, but let's just go ahead and buy some stuff while we can. That's kind of what it's feeling like. We're still definitely going to take a look at the charts, right, and figure out what is happening and how we can trade it. So still a disconnect between the Fed and the market's inflationary outlook, and I do believe a lot of the speculative, opportunistic sentiment out there is in spite of. Oh yeah, tell me something I don't know. So what? You're thinking you're going to be at over 5%. We're thinking it's going to be 4%. You're making a big deal about it. The markets will recover faster than you think they will. Fed's point is, look, it's not the markets we're worried about. It's the economy. We have to get ahead of this thing because if we don't, it's going to linger a lot longer. So we would rather be aggressive in the shorter term and peel off later than miss this and have this economic slowdown continue for a long time. So there's just two thoughts. Which one's right? I don't know. But right now the money's saying that the markets are right. So let's get into some trades that we had looked at last week. These are from you guys, and they did pretty well. I like the SPY neutral trade. I don't have the chart for it because we're going to get to the SPY chart here in a minute, and I'll talk to you about it there. But ADT looks good. XLP is one that I liked. I still like that sector to slide a little bit lower, although the communications is pretty strong. But the consumer is it's slowing. I like it. We'll get to the charts here in a second. Let's start with our bulls. This is BA. And real quick, just a side note, some of these have already announced. I think Boeing did announce yesterday or this morning, but some haven't. So make sure you check earnings on all of these. I'll see if I can't give it a quick look as we're looking through some of these, all right? But I do like Boeing. From last week, it's hanging in there pretty good. Kind of a sideways trade. We're talking about maybe seeing if this can just hold on as a diagonal spread. And it did pretty decent. Had that little bit of a slide here. Which was last week as well, folks. And that move actually had some volume with it in the overall markets. And if you jump onto the put call ratios, you can see the activity. They give you the ratio of the activity of each day. And it was a pretty good day. It was well over 1.46, I believe, to 1. And then it's usually at a 0.68 is where it was at yesterday, things of that nature. So there's still puts being bought, but on days like this or moves like this, there is a flight to safety. It just depends on when the expiration dates are and how long those puts are going to last. Because when they come to expiration, then they got to load up on other ones, and what ends up happening is you do get this move down. Now, not exactly in Boeing. I'll bring it up again here when I get to the sector charts, but there's kind of a reason for it, but it's been holding in there. I do like Boeing here, though. I do like it sideways. If you guys want to place something or sticking right at that 210 mark, a calendar spread would be cool here. A butterfly would be fine. I'm fine with either of those, but slightly to the upside. Thank you. As been said, Boeing reported this morning. Looks like they did all right, but that's even if they didn't. This is kind of the action that I'm seeing. Let me erase that little marker. This did gap down. So it gapped down and started trading down. It touched its 20-day moving average, and look where it is now. It actually came back up and touched this point, but it is halfway through yesterday's range. So good, bad, or ugly, yeah, it's still down for the day, but the action so far today is back up. Microsoft's another one I'll show you here in a second, but let's finish our picks. Don't want to get too far off topic. I did like AMAT. This, to me, feels like it's still pulling back. I think it does have a nice chance. I kept it all the way over here so you guys could see this little peak. I didn't zoom in too much. But I do like it how it kind of failed through this area, got the crossover. Looks like it's about to cross back over and just trying to stay above that 110. I think we were talking about it as, hey, 110, 115 in the shorter term, or maybe a little further past that. But I like sideways here, bullish to sideways. I like a 105, 105, 115 vertical spread if you want to go deeper in the money. I don't want to get too aggressive like a 110, 120. But maybe a 110, 115, maybe a diagonal spread with those numbers. Or even a butterfly, 105, 110, 115. Actually, maybe play it as a targeted. I'd put it more towards the 115 mark. So maybe a 110, 115, 120 butterfly in the next week and a half. So, thank you. AMAT has earnings on, was that February 15th? So, keep an eye on that. Let's do this. Moving on to our last. And this is Huntsman. I did like Carnival Cruise as well. Huntsman, and they are very similar, by the way, if you pulled up CCL. Very similar patterns. But this one just kind of was in line first. It popped out above this little move that it had above that 31, and it looks like it could be kind of coming back down to it. That's between 31 and where it touched at 32. That's $1. All sorts of things you can do with it. Sideways from here with a credit spread. Maybe a bull put spread on that would be kind of neat. I'd be fine with a targeted 32 butterfly. 31, 32 debit spread would be fine. I'm fine with that. Or if you want to see if this can kind of move sideways, I was going to stay a straight call on that because you do have the opportunity with it being a little bit less expensive. But I do like the decaying element just in case it's going to pull back more or move sideways. So definitely some sort of a combo on that. But it's a pretty decent chart. Skipping over the SPY, we'll get there in a second, and let's go down to the bears for now. ADT was a nice bear trade from you guys, and I like the fact that it just kind of rolled right over here. Nice break below the $9 after setting a lower high. Pretty standard, isn't it? It looks like it's just bleeding a bit lower. We do have some targets on the way down. It's a what was I going to say? It's a smaller dollar stock. But don't let that fool you because it doesn't need much to make some pretty decent percentages. I'm not sure what it's got as far as strikes go, but you might just be best off putting out a bunch of time on this and doing like a $9 or an $8 strike, maybe a $9 strike if they have it. I got to double check on that. But I just like the chart from last week, guys. So great job. It's been a good bear. Here's that XLP that I am waiting for my opportunity, and I think it might be today, depending on how these markets finish. If these markets erase the majority of their loss this morning, I can't be bearish. I got to be bullish. However, if we continue to roll over and we see a little bit more activity or participation, of the VIX, then I'll be a little bit more confident on playing this somewhere, getting into it between 73 and 72 with a target at about 71. Or at least in the short term for a diagonal. So I'm just kind of waiting for the overall motion of the ocean. But it's looking really good today on the bear side. And then Pan W, I was just listening to Corey's end of day yesterday, and he said it looked like a pretty good one. He had it going down to, I believe, the 140 range. What I don't like is the color of the candlestick. What I do like is the position of the candlestick. So yes, folks, we can get bearish moves with green candles if this is indeed going to be a little bit of a hiccup day where the markets are ready to fall apart from support, or is this just that head fake where it's going to gap down, everybody sells, and now we're going to get purchased into it? I'll get to the chart and explain what I'm talking about. Once again, the overall markets will dictate if this is going to be a good trade to the downside. So kind of waiting on the bears right now to see where these markets close. Alrighty, so let's get moving and do a little bit of a market analysis. So far, it's gone nowhere. And what's really interesting is today's Wednesday, so it's only been 2.5 days of trading, but look where these markets are, especially the spiders. I thought that was very interesting. Now the Qs, they would be probably higher if it wasn't for this morning. It was down well over 2% at one point. So you could see that so far this week just parked, and they're parked at a very difficult level. There's the numbers right there, but more importantly, let's get into the charts. because we still have this. And once again, we had a trader come up and say, hey, what about a symmetrical triangle pattern or something sideways on the SPY? And check that out. It has hit its head on that 40, gapped down. Man, let's get rid of this. It's gapped down. It's kind of hard to see because we've got a little dragonfly doji developing here, but it's still above its moving averages, but below the 40 or 400 mark, excuse me, and it just kind of parked itself. This is absolute consolidation. Look at the volume here. Now, I'm sure that might change by the end of the day. It might be a little bit higher because it did gap, but if this can run back up to the 40, well, then I'm all about what Corey's been talking about, and what we've been seeing is this ascending triangle with that ABC correction. If you guys want to nerd out on that, that we could see, maybe not up to here, but this would be the point that it would hit to finish the ABC correction. And at that point, we'd expect a pretty good fall to the downside. So it's still in play. This morning, I was thinking, well, that's it. Jeez Louise, it tried to hit its head here, and it might just fall apart. We might not get the 20 crossing back above the 50-day moving average, and we might be testing this 380. That still could happen. We would need to see more pessimism with this pessimistic numbers. Well, I've seen in some, and it's hard to just go off of a couple, but like AT&T did pretty decent, opportunistic. It's gapped up. Microsoft had bad news. It was purchased into anyways. I think maybe the sentiment is just kind of saying this is going to be a crap quarter. Let's just buy it. If that's true, then we will be pushing in this area, and we will be back to that, hey, shorter term, we got to be bullish. Longer term, maybe it does hit the ABC correction and we do fall apart. But in the short term, to try to fight this on the bear side is going to be very sloppy. So I'm leaning towards that's a little bit of a hiccup today. I think it's a little bit of a flush out, saying gap down, who wants to sell? Doesn't look like anybody does, and they buy. We saw this last week, and it was right here, and it did sell. We did have a pretty good increase in volume as that happened, but it came right back and hit the support and was met by buying. So what was this? Was this just, hey, we need to replace our puts that expired or that are going to expire, or I don't know, because there was a lot of put call action on this day. So I've got a market that seems to be ready for it. That's kind of what I'm seeing it. The sentiment's past it. I'm bored of it. Yeah, recession this, whatever, I don't care. But I'm seeing a market that's prepared for it and more opportunistic buying than any. But I do like it if it's going to chomp around for a while. We're sitting between that 400, 390 if you guys want to play that sideways trade that you guys brought up last week. Okay, diamonds here. Same idea, but what's interesting is it's looking a lot weaker than the others. And what's kind of throwing me off is that it's got more of a descending triangle pattern where the SPY was a symmetrical triangle pattern. Now this was the leader for quite some time, but I'm seeing a lot of it sell, and it is just the Dow 30. It's the tracking ETF of it, so it's a lot more tumultuous, and it can be reactionary. But there's stuff coming out of utilities and energy. Utilities being the weakest sector so far this week, and energy. And this might just be getting that brunt end of it. And if there's indeed going to be an economic slowdown, then this is, it's gas heavy, it's oil heavy, energy heavy, and so it might bleed off. But where it's at, sideways still. It would have to break pretty aggressively below the 330 for me to get bearish. This one is just kind of one that I'm steering clear of. Let's get to the Qs. And this would be the one that I would want to jump on board with. So anything in the SPY is fine because I like the SPY as something sideways. But if it breaks out, hey, that's kind of the one that we watch. But if this also breaks out, then we are definitely going to see some of those traders buying stuff off the bottom. Big tech company comes out, says we're laying people off, and we're not going to do so well, and it's met with purchasing. Okay. Those are investors trying to get into something ahead of something that we're going to see a lot of stuff trigger to the upside. So we just have to be patient, just kind of check our darts or throw our darts when we need to. All right, guys, let's get into some economic numbers. Super light, absolutely nothing going on the first part of the week, but then we got a whole bunch next. We did have the leading economic indicators, which does show a slowdown, right? That's good. It's going south, which is supposed to be good. Bad for the economy, good for the stock markets and and the expectations of maybe easing those interest rates. Manufacturing PMI in line. Services PMI in line, a slight uptick, but not bad. I'm just going to call that in line. I do think that what's going to be big is tomorrow and Friday. I think tomorrow the initial jobless claims we need to see. Now the expectations. Sorry, I had to squish this down. There was just a lot of announcements coming up on Thursday and Friday. So the expectations are for an increase, but still just over the 200,000 level. We need to see this number or higher. Period. And I don't think if the Fed doesn't get that, then the markets will have to realize that the Fed is going to keep their foot on the gas. Real GDP will be interesting. Q4 to see if this slows down as well. 3.2%, 2.8. That's a substantial drop that they're expecting. If this comes in higher, then once again it just shows that okay, it's not cooling fast enough. And then this is the one that everybody's been focused on lately is the PCE. We've got the core. We've got the year over year, we've got the PC itself, so we'll just take an idea of these numbers. If they hopefully they all come in the same kind of an aspect. They're all going down. I don't know by how much. They're kind of hard to follow. Sometimes they're confusing. If you got one up, one down, it kind of washes. And we've seen this on a previous Friday where the markets just didn't really do much with it. But that's what I've got on the docket. All right, so let's pull the class, and I want to see what you guys are thinking about. Get my poll open. All right. Launch it. And what I'm looking for is for the next, I don't know, the next, this week, the rest of the week. Let's do that. Now I did lose my poll. I don't know where it went. Okay, there we go. Let me move it over to this screen so that my recording people can see what we're doing and how the voting is going so far. Now I know that we've been slightly bullish, and you kind of have to be that way. I was zero last week because we did have that red candle right at that resistance that was rolling over, and it did follow through one more day, but then subsequent days going into Thursday, Friday, Monday, and Tuesday, up. So here we are right at that gap down this time, but it looks like it might be climbing higher. So, all right. So we're about a minute into it. Looks like we stalled out here at about 81% of the vote. Let me go ahead and close the poll. Or 81% of you voted. And I'll share it. And we are definitely at a +1 level. It's interesting to see 38% at -1 and 31 at 0. So, but 54 at +1. And that makes total sense to me. Great, guys. Awesome. Thank you. And I am exactly with you. So above the 20, above the 50, they're still not quite correct. The slope's right, but the 20 is below the 50 for me. So that's the only thing hesitating on the weekly outlook for me to be a +1 as well. The gap down has also kept me from going +1 on the weekly outlook. But where the gap has occurred, and since it's still above that pivot point and above its moving averages, my monthly outlook is definitely easily at a +1. Well, what does that mean? Well, folks, if you got some sideways trades on and you're fine with these gaps up that retrace and you can sit through some earnings, yeah, then I think a 0 to a +1 sideways to slightly bullish might work out here. If we hit the fan, and Corey made mention of too, it'll probably be after a pretty good blow off top or move to the upside first, a piercing line. You know, we had this. That was a gap up to here, and then it just fell. Maybe we get one or two or three candlesticks maybe up into this area, and then we'll just fall apart. That's what it's going to be. So what's tough about this, guys, we could have some really cool sideways trades on and some diagonals, things, and when it hits, it'll hit. We'll be like 0 to +1, 0 to +1, -3. That's kind of how these flush outs work. Sitting around and waiting for it, I've been struggling with for a long time. So it's one of those things, as long as I don't put all of my money out there, I'm okay if I've got 4 trades and all 4 of them just get murdered. But I'm not going to put out a portfolio size amount of trades. Not until I'm comfortable with some sort of spike, some sort of VIX, and at least getting through earnings season. That's going to be tough. All right, there's my 2 cents. You didn't even ask for it and I gave it to you. You're welcome. Let's get to the sector analysis. And what was the strongest? is now one of the weakest. I guess not true. Utilities, it's energy that was the strongest, and it's mid-level. But utilities it's fallen down a little bit more. But communication services and technology having big bounces. Communication services, I don't know if Verizon's out, but AT&T had some pretty good numbers, so that's pretty good. But some of the big tech is coming off the bottom. A lot of it is showing that it has had such a nice rally. It's actually hitting resistance levels like Amazon and even Microsoft looks like it's ready to roll over in a downtrend with Apple. But that's where they could consolidate and get that last push higher before things happen. Even in light of bad news, it's been interesting to see these purchased. Okay, so let's take a look at the communication services and utilities. First is the comm services, and it's just got yourself this technical shallow pullback up at resistance, and it's just a beautiful breakout. And looks like it's going to channel back down or consolidate. Very difficult to short at this level. But pretty good argument if you guys want to play something bullish above the 52. I know it's kind of hard sometimes because this could whip around on us, but hey, people are purchasing it and it's moving higher. So bullish credit, bull put spread, diagonal, horizontal. You could, if you're kind of leery, maybe a 50, 52, 54 butterfly spread. Now that's almost counter trend trade, saying that it's going to work its way back down to this 52 line. Or if you want to be aggressive with it, a 52, 54, 56 targeted butterfly. Just depends on your outlook. And if it's something you guys even want to play. I guess I should say that first. And on the bear side, it is utilities. Utilities is a little bit more cut and dry, and it's a clearer trade to me. It's just got about to cross over here. I like how it's floated below that 70 support. Came back and touched it a few days ago. It's gapped down to be a little bit more comfortable in your direction. I could wait down through 68. This is something that if the economy does slow down and growth and expansion does slow down, the demand for utilities and energy is going to dry up, and so this could float down lower. So this almost makes sense to me on a longer term bearish, if you believe the world's going to slow down kind of a trade. The other ones, since the correction has happened in a lot of those big techs, it's just bottom fishing. It's just big moves off the bottom because, hey, who wouldn't want to own Apple 60, 70% lower than it was going into 2025, 26, you know what I mean? So we'll see. All right, so that's it. Take it for what you will. We'll keep an eye on things, right? We meet every 2-3 days. We got our weekend class, and we got this Wednesday class. So earnings should give us an indication of sentiment. And is bad news being bought into or sold into? I know it's only a day, folks, but I have to say it's being bought into. Some bad news. These companies are laying off and have laid off tens of thousands of employees. Now that does help the bottom line, but it does slow their manufacturing growth and expansion. However, people are buying into it. We'll see if this lasts. We'll see if it lasts. We could roll over and fall apart for all I know. But if we climb all the way back and close flat, I got to be half glass full because that's where sentiment's definitely going to. It's remained complacent. The put-call ratio shows that traders are comfortably hedged for now. Every time there's a pullback, there's a spike. And that it's been some of the highest in history. Everybody knows about protective puts, and they're using them. So there's that side of it. The complacency is also seen in the VIX. Do you remember that spike up in the VIX 2 days ago, folks? It jumped up to 20, 24, and then it went right back down. That's the volatility index it measures S&P futures contracts or futures and options contracts. That's what happened. People loaded back up on the puts, and the next day, markets go back up. So the economic data, jobless claims, GDP, and PCE are on deck for tomorrow and the next day. I don't think, when we'll see if the markets can flat out ignore it, right? If those numbers are really bad and the Fed comes out and gets very hawkish and the markets go sideways or up, well, then we know where that stance is in sentiment, and it will supersede what the Fed can do, right? The sentiment is powerful, even if you don't agree with it. Okay, there's enough of that. Let's go out and take a look at some trades. We've got a couple you guys have pushed out. Oh, here's one. That'd be good. And then we'll go from there. Let's see what's happened since the day. Okay, yeah. Okay. So here's that move I was telling you guys about, just off the bottom. So far, it's not like we're all the way back up. I mean, we're still down 1.3% there in the NASDAQ, but it's sure not over 2. We'll see. We'll see what happens the rest of the day. All right. Let me get my pen. Okay. Who's first? Jason, BKR. Got a bull pullback with a 30-33 bull call spread idea. Okay. Yes, sir. Oh, did anybody see on those bad prints yesterday? Kind of interesting how they're on some of the larger name stocks. I'm wondering if it's just some trades that got posted through. In fact, I had a conversation with one of you guys yesterday. I forgot which one, but we're talking about, hey, that could just be a bad print. Trades happen behind the markets or outside the markets. Sometimes they go through and get printed. This one doesn't have it. So this is energy, okay? 30-32 is what we're looking for. Yeah, Jason, I like it. It's right back up to where it was. Looks like it's holding in with today's candle. I like the shadow yesterday. Those are cool. Let me zoom in. I like hammer candle shows that push all the way back up. Keeping this thing, the interest is definitely above that 30. So yeah, it's actually confirming today if you're going to use that hammer candle as a reversal. So I do like it. Why I like it, I'm going to have to find my Post-its. I was trying to make a New Year's resolution, folks, that I was going to go digital. No more analog, no more pen and paper. And yeah, that lasted all of 5 minutes. So here I am back with my pen and paper. BKR. Thanks. Take a look at that. Dan Pep looking to see if we get a move back up after this slide. Okay, let's take a look at it. PP. Okay. Yeah. Ooh. Yeah. Or consolidation. I'm fine with a consolidation and a rollover. PepsiCo. Yeah. Okay. I like it. So you could wait for that bear rally there, or you could just see if it's going to consolidate and move lower. This is something that, oh yeah, here, I said I would do this as I scroll down, and sometimes you can get the earnings here. If it is February 9th, you've got some time on this. It probably won't do much, but go sideways unless something in its sector does good and maybe it moves. But something sideways to down here would be fine if you wanted just to mess with it and play with some of that, put some theta on your side. Stuff like that. I like it. I'll put it down. All right, Joel. What do we got here? OLO. 7.5 call, March expiration, target 9 with potential to go higher since it's so far out. All right, what are we playing here? This is a tech company. Software. Look at the move this has had over the last couple of days. Wow, this thing like had just flatlined here for a minute. Wondering if there's any sort of news on this, but okay, we're talking about a 7.5 call, target of 9, he says. Yep, right up to basically what it was doing here, and then maybe the potential to go further. It, based on what I'm seeing through here, this might stall out. I don't know when its earnings are, but you might want to check that. And if you want to kind of scroll down and see what's going on with this, is there rumor of a buyout, or is this a company that could be acquired? It's just the way that it's behaving here. Looks like it's waiting for something. But this is one of those small but nasty ones, which is good because $7.5. This thing hits 9. That percentage gain is astronomical and fun to play. Just keep an eye on it here, Joel. Maybe if it does have weeklies, it probably doesn't. Oh no, he's got March expiration, so this would be a longer term. It'd be nice to maybe put a calendar spread on this thing for at least shorter term. Do a or a diagonal 750, 850. Let it sit there for a minute. But okay, let me put it down. Put it down on the bull, and I'm going to put sideways on this too because I do see potential for that sideways. If these markets just want to be stubborn and bounce back and forth, sideways works. It just takes a lot of bravery. All right, let's take Nick's got ROST. February 24th, 118. February 3rd, 122. Okay. 118, 122. Oh gosh, I keep forgetting to zoom in first. All right, I'm going to shrink this down, move it around. All right, here we go. 118, right where it's at. 122, right about there. I like it. Cool. Yep. Very nice. Not much more I can say to that. It gets to 20, it can hold on for a minute. That's why you sell the 122 and then maybe float higher. Excellent. ROST with, I'm going to put a little sideways arrow too because, but I do like it as just bull. I mean, it's good. Between 115 and 120 looks like to be that range. And so I'll put a sideways on there for anybody who wants to butterfly that thing. 115, 120, 125. Good, good, good. All right, Mesbin's got a couple of trades for us. First is Ben. I want to see. All right, it looks like Robbie has C as well past or O. Is that O or C? Oh my gosh, it's in a brief. I can't. I think it's C. Where's my 2, 3, 5, 6, 7, okay. We're getting all sorts of stuff I got to read today. I'm reading today quite a bit. All right, let's start with the first one. Thanks, Robbie, to Citigroup, which is also going to be both Robbie's and Mesbin. But let's go with Ben here. I'll erase my... There we go. Okay, so Ben, high base pattern, earnings on January 30th. This stock only has monthly cycles. Can't do weeklies. Report either diagonal. Put spread good after earnings. If it looks good after earnings. Sure, sure. So you want to wait for the earnings, it sounds like, which is great. You could try to play the earnings. Let me see if I can't zoom back out on this and see if there's any. Nah, looks like it's just going to be whatever's up there. Okay. I was looking for any sort of resistance points above it, but it looks pretty decent. It's chopping around. Sure, I mean, what's going to be tough about this, and this is all with earnings, and maybe this won't happen, but it might be best just to play it as an earnings play. If you want to just put, and it's also cool to do with vertical spreads. I know she says there's no weeklies on it. So just play the monthly and then see what it does after it gaps up, or if it gaps down, then you can make adjustments. So that's always cool. If you do wait, make sure that you let it establish itself after earnings. And I think that's what you're saying if I keep reading this. Cool. So it looks good after earnings. Yeah. So it's a potential. Let me put it down on the bull watch for you guys that maybe want to play earnings. I'll put an asterisk on it so you guys remember, or so I remember that it has earnings coming up. Okay, let's take a look at Citi for both of you guys, for Robbie and for Mesbin. Let's get here first. Okay, interesting. All right, Robbie's got dividend disbursement on February, looking at a 51.56 bull call spread for the 17th of February. Let me zoom in on this. All right. Bull call spread, so you'll have a buy and sell on that, and if you get caught with the dividend, it kind of washes. That's what's so cool about vertical spreads, right? Okay, let's see. Expired on the theta. Our case dividend cases retracements, short period, tired sideways movement. Sure, I like it. It's already had its earnings, yep, and it seems to be doing pretty good. The chart itself just seems to be hanging in there. It does have that kind of movement back down to that support level, but you are looking at a 51.56. It's aggressive. It's fine. I'm cool with that because I mean it could definitely do this, and he's talking February 17th, so plenty of time. I like it. Let's put it down. Okay. Yep. All good. Citigroup's good. It's a big one. It's cool. You diagonalize this thing. There's kind of fun, different things to do there. All right. Okay, Felix got a bear rally on UNH. Let's take a look at that. Yeah, Dan's got a comment on those. Were some ugly charts last night, some of those weird prints. Okay, United Healthcare Group. What do we got on this chart? Let's see. Nice candle confirmation. Wow. Look at this. Look at that. It's this gap up, right? It gaps up, trades all the way down to the 480 mark, and then comes back, and now it's starting to slide. I like how it's hit that 500, but man, if you want to play between 500 and 480, that's 20 bucks. These are tough to, they're hard to do sometimes, but there's a lot of range in there. So if you just like put on a credit spread, stay above, hey, it's going to stay above 480 and below 500. You could maybe do a butterfly on that. It'd be kind of hard to target a butterfly. I guess you just split the difference, 480, 490, 510. But something sideways to bearish on that. Let me put it down on the bear side because I do like it. And this, once again, this is the weakest sector. One of the weakest, healthcare, right? Right at the bottom. Utilities was the weakest, but this is pretty darn close. Cool. Okay. Matt, XBI. Okay. Oh, cool. Thanks, Jason. He was able to get a better deal on the 490, 480 on that last one, folks. Because on that gap, which would make total sense. Totally calms it down. It's also pretty difficult. Like this morning, I have an email I got to answer that one of our traders, hey, I've got this diagonal call spread and I got such a deal on it. I mean, it's such a better cost, and I've done something very similar as a bear or as a put diagonal spread, and it's the risk reward isn't good, and it's 100% inflation. It's just volatility is high this morning. The puts are overinflated. You're not going to get the better deal, and just the opposite. Since the market's gapped down, the calls have reduced, and you get the better deal on the calls. It's just what they're worth at the time. Now the real caveat is what you pay for it, right? Because once you go to buy it, you either get it or you don't. You just be sitting on the bid or the ask for forever. All right, let me get into this here. Matt's got 84 to 95. I prefer the 86.95. Yeah, okay. Pretty sure this is going to be a diagonal spread, right? Yep. Okay. 86, 95. Okay, yeah, not bad. Not bad at all. March, February, slow play. But he's playing the biotech sector. If these markets are going to just get boring and bleed and move higher, he's back up to where it was in August. I'm fine with that. Cool, Matt. Let me put that down. XBI. What's also cool about that is don't have to worry about earnings. Neat about ETFs. All right. Bull run, yeah, bluff top. He's right. He says it's a little aggressive, but if the markets can move higher and have that surge to the upside that we've been talking about, that ABC correction, then yeah, I could see that getting there pretty easily. Let's jump around here. Let's take a look at a couple of these real things before I cut you guys loose. Here is, I wonder if they're, looks like they're already corrected. Who else had one? Microsoft. Oh, it looks like Finviz fixed the charts already. But maybe not on all of them, but some of these had these really weird upshooting. Man, Microsoft still looks bearish. Apple looks bearish. I don't know, folks. I want to be bearish, but these markets are saying no. So it looks like they went back and fixed out the charts. Cool. Yeah. Oh, AT&T. Yeah, did it have one? I think it did. I don't know if it got fixed. Yeah, there you go. How's that for a chart, right? So all the way down to 15. High of 22 in 10 seconds. But once again, this is its earnings. Broke out of resistance. Pretty good play. Oh, that's fun. All right, guys. Let me type these in. I'll cut you loose and we'll go there. Let's see. Okay, and we'll go from there. Well, I'll take a look at another one. Fine. Alcoa snuck in here with Felix. Basic materials and the pullback. Yeah, I like it as a continuation of the bull pullback here. It looks like it wants to roll over, but if it can float higher, if it rolls over here, that looks a little bit more ominous, but it is. doing nicely right at this point. It's just slowing down. Maybe we do something like this. I put Alcoa down maybe on sideways to down or sideways to up, excuse me. Let me check something real quick. Alcoa usually is one of the first to announce its earnings, isn't it? I think it is. Yeah, Alcoa is one of the first. Let's put it down on the we don't have a sideways. Let's go sideways to up on this just for fun. All right, that's enough. Are you still making any trades or are you watching? I am still watching. I'm ready to. I might pull the trigger this afternoon. So and it's going to be on XLP. It's going to be on some of the ones that we've talked about. And if I do, I'll definitely tell you guys about it. Something to talk about. But I'm just getting crazy with these markets. They're just goofy. Okay, let's build this list and cut you loose. Okay, so always triple double check our earnings. You guys got that. Be patient. Sideways still good. I mean, it's interesting because if you take a look at the last three classes we've had, if we were sideways in the majority of these, we'd be doing pretty good. Sideways to up, it's been working, and the trades that we've been talking about, you guys are submitting, are working. So I'm just gonna blindly start purchasing all the trades you guys suggest and forget about it for the rest of the year. How's that? I'm only going to trade Wednesday class trades from now on. Wouldn't that be fun? Wonder how well we do as a group. Probably pretty good. All right, let's do this from current slide. Here's our list. Let me draw some arrows as there are up and down. Now Ben has earnings on the 30th that Mesman came across and saw, and then I like OLO with the sideways on that. I like raw ROST, and then Alcoa neutral up. Because it looks like it might kind of fizzle out, but if that's indeed going to continue as its bull pullback, then Alcoa could move right back up to where it was. All right. Productive class today, guys. Thanks. Appreciate you. Yeah, if you got any questions, you know how to get a hold of us, and we'll talk to you next time. All right, guys. See you later.